Hi guys, Andrea Unger here, and a question that I often ask is how much capital do I need, how much do I need to start with, or generally if the capital that we want to dedicate is enough or not. In many cases, obviously, people are not willing to dedicate too much capital to trading and want to start with a small amount of, or with something that is not dangerous, let's say. And that's absolutely fine. So the question is, yes, but how and what can I trade? Obviously. All the path has to start from the concept of risk. And here we mean only the downside risk, because talking about upside risk is very nice and beautiful, but it doesn't help us here, because downside risk is how much we are going to risk to lose when we open a trade. And those losses need to be compatible with the amount of money we have and don't have to impact too much on our equity, which means, for example, if we are hit with a stop loss, which is obvious, can happen, we should not lose more than 2%, which is it's not small. 2% is fine, maybe. So actually, we don't have to adapt, therefore, our stop losses to stay inside the 2% because we do not want to change the nature of our trading system. It would be crazy to trade, for example, with a stop of 2 ticks. I mean, it doesn't work at all, obviously. So we need to have a system that makes sense, and considering that it makes sense, see if the loss that derives from a stop loss is compatible with the risk profile we have. So risk is a starting point, and so we have to decide what markets can we trade to trade small enough if we don't have a huge capital. First thing that comes to mind is Forex. Forex offers a tremendous scalability downside. You can scale down to mini, micro lots. So actually you can trade as small as you need to stay within your risk parameters. So this is an opportunity to start. And another opportunity is obviously the contracts for difference, which are not allowed everywhere, but where they are, they can be considered provided the instrument you choose offers a decent spread, bid-ask spread, because sometimes they are so wide that you cannot actually really trade that stuff. These two have another point in common, that normally they are offered through the platform MetaTrader, MT4 or MT5 MetaTrader. And this platform is normally free, offered by your broker. You can program it, so it's not easy, really very easy to program, but you can learn what is necessary to do. But you have a set of instruments and software that can help you to start with a small amount of capital and keeping your risk parameters within what you need. So this is an interesting opportunity. Well, it's possible if you are willing to do it. If you have a little bit more money, here there is no downside limit actually. $1,000, perfect, you can do it. Very small, you will never turn the $1,000 into something you can live out of. It's impossible, believe me, yeah, luck, but we don't consider that. It's not the way to get rich. It's the way to trade, to have your hobby, to learn something, and so on. It's not something that you can live on, but why not? But if you have more money, $20,000 for example, you can consider some markets, for example, live cattle. Live cattle is a market that you can even trade with, for example, a $400 stop. And $400 in an account of 20,000 is more or less 2%. So actually, this is something that could be compatible. So if you have a strategy or live cattle that trades with $400 stop, it's something you can consider on an account of $20,000. Other markets, heavier markets, DAX for example. DAX is a nice market, but it's too expensive. But there is a mini DAX, which is 1/5 of the DAX. So a stop of €1,500 on the DAX becomes a €300 stop, which is again compatible with that kind of account I was mentioning. Gold, I mentioned in some other video that gold is a great market to develop systems on, but it's expensive. I mentioned stops of $1,000, $1,500, $2,000, so something that is not obviously applicable to a $20,000 account. But I tell you what, There is mini gold, which I don't suggest because of the volumes, but micro gold again offers a very interesting opportunity. Micro gold is a good market to trade small. It works. Don't consider mini silver, it's too illiquid. Mini crude oil is feasible, but it does not scale down that much from crude oil, but it's something that is liquid enough to trade. So all the mini futures, if they offer a good possibility, are usable. Even the mini S&P, for example, has strategies where you can apply a $600 stock, for example. Some models work with that. So maybe on a $20,000 account is still too aggressive, but on a $30,000 account, this is something that could be used. I don't mean that you cannot trade it on a $20,000. It's simply too aggressive, because if you trade with a risk higher than 2%, you are very aggressive, believe me, and it is dangerous. I don't say 2% is fair, I say that more than 2 is too aggressive, in my personal opinion. So this is a set of information if you don't want to put too much money into your trading account. You want to trade small, if you want to trade more with some more money, but you don't want to risk too much. These are solutions to start with, and then once you learn, maybe you can have more opportunities. Stay tuned, more to come. Ciao! Enjoyed it? Click the link below and you will be noticed as soon as new material is available.